Alright guys, today's video is going to be crazy, extremely informative, and is probably going to be one of the only videos you have to watch to pay attention to on the stock market and AMC and GameStop and what's to come next week. So please try to digest every single piece of information I bring to you and try to stay until the end of the video. And all I ask you guys to try to do is to hit the like button with your nose. Also subscribe. Let's roll that intro and get into the video. Alright guys, so this is the S&P 500 in white right now where we are trading at, overlaid over the 2008 crash. And as you can see, next week will be essentially the moment of truth to see where the S&P 500 actually goes and if the Fed successfully saved us from a full-on market crash and a market sell-off. This is the VIX, the VIX, which tracks the volatility of the S&P 500 overlaid over the same exact time frame. And as you guys can see, next week again is the moment of truth for the S&P 500 and the VIX. And if some sort of catalyst comes and we start to sell off in the S&P, you can start to see the VIX start to rise. I'm not telling you guys to buy calls or unload your shares, but let me know in the comments if you guys are going to be playing this and if you think one of these will occur. However, we do have a little bit more evidence to back it up, which is getting scary. Fed official Bullard states that substantial rate hikes may be needed. He said that we need to be getting into certain zones to target and combat inflation, and these are the zones that he's talking about. So the dotted line is a recommended policy, which is a recommendation as to where inflation should be. However, he states that we need to get into a restrictive zone, which is the wider, more hawkish line that you guys see up here, suggesting interest rates should not only go to 5%, but actually get restrictive and come all the way up to 7%. This could be detrimental to the market, but it may or may not have to happen. Not only that, but the New York Fed survey of consumer inflation expectations shows they moved up, quoting, "in the wrong way." Last month, reversing several months in which inflation expectations fell. See, we thought inflation peaked up here and that we thought this would be a gradual chart to the downside. However, it just started spiking again. Alright guys, now I really want to get into AMC and GameStop, and could this entire setup we've been tracking and entire setup we've been talking about be a trap? So we have another article, not only one that we went over yesterday, but another article saying GME shares up 6%, GameStop retail investors plotting a short squeeze. They go on to state that GME has been making big price swings over the last week, closing at $27.59, up $1.54 or 6% on Tuesday, November 15th, while also climbing $3.04, which is up 12% over the past few days. Now you might ask, Lottery Stacks, why are you bringing up these shitty ass articles when you know that all of the social media is rigged anyway? Well, the only reason I'm bringing it up is, one, the only times they do this are right before we actually do squeeze, such as the run-ups in January and the run-up in June, because the media always wants to be right. But not only that, they're calling 6% runs and making entire articles about it when GameStop ran 90% in almost 1 week and they didn't even cover it, right? We're getting halts and they don't cover it, but we're up 6% and all of a sudden AMC and GameStop retail investors are trying to squeeze the stocks again. It just makes me very, very curious as to why they would put out these articles, which leads me to lean towards thinking that we are actually going to have a big run-up. However, before we touch on the charts, the implied volatility, where it's trading at right now, is not absurdly crazy. Call volume is more than double put volume, but as you guys can see, the last times it hit this line, we'll take the most recent pattern that actually looks very similar to where we are at now, which is around May 16th, and if you pop over to the chart, it showed that they actually let these contracts just slowly ride out. You see, the reason this is interesting is we've been calling this little box a cycle delay. So what makes me very, very curious and very, very interested is that a lot of people were buying call options at this low. And again, retail doesn't have a ton of money, so they don't buy super far out expirations. And in my opinion, what market makers and short sellers knew was that, okay, we're going to get this huge pop in the stock, but we cannot get a gamma ramp going. What we're gonna do is we're gonna throw in a little bit of a cycle delay, let those contracts expire worthless, then let the stock pump. Which, just looking at the chart, this almost looks too good to be true. Now, it could definitely not be a trap. I'm just saying it just looks very, very, very fishy in a way, and I want you guys to be very, very careful, and I'm going to give you my conclusion in a minute. But another thing I wanted to point out is that if you come over here on AMC, right, 500,000 shares available to borrow, Okay, you come down to the fee, it's back down to 49.7%. It was previously at 90, and then they dropped it to 60, and now it's under 50. However, it does show that some shares were returned somehow. And as for the calls to puts, we are losing on the week. So essentially, just expect market makers to collect a little bit of that money from you guys, because call options are not winning against the put options for right now. Short exempt stacking up a little bit higher, and retail is not really coming in, right? You see a 17 million in volume for yesterday, and then today only we're at 14 million. If this isn't a hammer candle for the big spring coming next week, then we really need volume to pick up, or the stock is going to crumble. However, again, the chart setup is not too far off, as you had volume decrease back here in May, on the 21st of May, before the big run up as well. So essentially, it's very hard to tell if this is a trap. Now, if you come over here, you will see that Adam Aaron tweeted this a while back on April 30th of 2022. He goes, and I quote, "The AMC token, after our vigorous protest, the Apes Movement community token is a total sham. AMC Entertainment has nothing to do with this blatant violation of our registered trademark and attempted theft of our name/reputation. We are fighting them hard, don't be fooled." It looks to me that he didn't fight hard enough, because this is when this tweet was released, and since then the stock got dropped even further, spiked up, dropped even further, and it took all the way up to the FTX collapse for something to actually happen with this coin. Now, you might have a question as to, well, lottery stocks, why can't they just sell off the price like they've been doing with synthetic shares, and, you know, why can't they just keep pinning it down? Why would they let it squeeze now? Well, one, right, this isn't the main instance, but of course we're talking about the stock market crash that could potentially happen, which could lead to margin calls, but essentially it's more about the FTX collapse and the tokenized security issue. You see, what these tokenized securities, there was not necessarily a cap on the supply, right? The supplier could just add more to the total supply of these tokenized securities. And what that does is that, you know, after all these shares are bought up on AMC, after all these shares are shorted, well, then the broker says, okay, you know, you can't borrow more shares against the stock. Therefore, you can't suppress the stock. There's no shares left to borrow against the stock. And then what happens is the broker gets a little bit of a glitch, and they go, oh, tokenized security? Okay, well, now there's this many over here that essentially I can locate. The broker's like, I can locate these. And then the market makers, the hedge funds, the institutions, they're like, perfect. So let's just keep shorting the stock down, right? Okay, FTX collapses. All of a sudden, the cost to borrow rises, which is something that you definitely have to pay attention to. And this is exactly why I'm saying, okay, well, maybe this could be a squeeze, right? This could be the squeeze. This could be the run-up. The cost to borrow was over 100%, meaning if I suggested to lend out my shares, I could just buy double my shares back with the interest that they're paying me, right? That's not something that that's not something that anybody in the right mind would be paying for. Well, Citadel, we touched on this. They're launching this crypto exchange, EDXM, right? The problem is, if you come over here, the exchange is set to go live in early 2023, which could essentially just be in January, right? This could be earlier, this could be in January, and what this could do is just be another FTX, except a lot more leveraged, a lot more corrupt, and just a 10x the bullshit that we just went through. So in time, if we start to move now, that could be a good sign. If we get halts all the way up through December into January, and then they come out with another tokenized security, it's probably going to be bad again. So my conclusion for AMC and for GameStop right now is, I know a lot of you guys want to buy calls. If you have that extra money, that's fine. I'm not a financial advisor. I don't give financial advice. But the best thing, in my opinion, for myself to do is that buying and holding is always just the way to go. What can happen is, if you buy these calls and it is a trap, you're giving the market makers money, the stock price is going to drop, and you're essentially just losing what you could have purchased shares with. And this is so tough to give you guys a conclusion, because it is 100% a 50-50 bet as to what we're looking at right now. I actually DM'd Peter Hahn this morning, which is a huge advocate for the whole AMC movement and the retail side of things. I go, hey bro, I'll be creating a video tonight on AMC. I have one question the community would like to hear your personal thoughts on. Is this setup a trap? He goes, what is the cost to borrow? Difficult to really say. GE's was made to like a spike, the price rose from 25 to 28. S3 Partners talking about parabolic. The next day, GME goes from 28 to 34 and back down to 27. That was a trap. I would think that AMC cost to borrow could be a trap, but coincided with the FTX meltdown, which I don't believe was fully planned to happen as it did, is that he's kind of saying that he's in the same boat as I'm in. I go on to say, agreed. It's looking like a 50-50. The chart almost looks too good to be true, but the FTX situation / cost to borrow is hard to put a finger on. In my opinion, shorts would be searching to find another quote-unquote tokenized AMC to drop the cost to borrow by Monday, and we will tell from there. The conclusion is that if the cost to borrow drops significantly by Monday, market makers, hedge funds found another loophole to drop the stock, and it probably was a trap. Alright guys, now that you made it to a random section of the video, we have a sponsor today, and it is Moomoo. There's a special link pinned in the top of comments and linked down in the description, where if you press it, download the trading app Moomoo, which is better than Webull and Robinhood. It is free, and you can trade options, go short, go long, at higher strike prices in options, and see free level 2 order book data, which is something you have to pay for on Webull. Also, you will get access to crypto and other exchanges as well. Not only that, just joining, signing up, depositing even $1, you will get up to 15 free stocks and a chance to win $60,000 for their holiday special event that is going on right now. So make sure to not miss that, as the top 10 people will also just get a free $1,000, so you don't have to win a full 60K. It is up to that. And that link will be pinned down below and in the top comments. Couple more things to go over before the video is over is that cryptocurrency ledger Genesis was seeking an emergency loan of $1 billion from investors. However, they got denied this loan. They did not actually get this loan. You can see that right here. Also, the CEO of Dutch Bank is warning about the danger of European reliance on foreign banks. And finally, all of this happened in China this week. Bond turmoil, a rapid sell-off in short-term Chinese government debt, triggers a flood of investors' redemptions, fueling a vicious cycle of price declines and more withdrawals from fixed income products. You can see it right here. Chinese asked banks to report on liquidity after sudden bond rout, and a data miss. October's unexpected drop in retail sales shows why Beijing recently took its strongest steps yet to stabilize the property market and reduce the economic burden of COVID-0. Stocks have another good week. Chinese retail sales shrink as COVID outbreaks strain economy, and fatigue. China's urban population is becoming increasingly agitated after almost 3 years of COVID-0, but there's a lot of fear around the country. Chinese authorities are planning to ramp up vaccination and strengthen hospital networks. Finally, Alibaba's optimism. Executives talk about business after China reopens, adding a positive tone to the company's quarterly report. Alibaba also expands its buyback program, suggesting that rewarding shareholders isn't so frowned upon after all. And Tencent to give away shares in meal delivery. Danish fund cuts China stock exposure in 100 billion portfolio. Chinese banks face deeper pay cuts in common prosperity. And the president looks away from Putin towards West in return to world stage. Again, all of this happened in 1 week in China. If you guys enjoyed watching the video, please just hit the like for me. It takes a few hours to make these videos and edit these videos and get it out to you guys. And all I ask is that the 70% of you guys watching that don't subscribe, just press that subscribe button. It is free and you keep coming back to the channel. I love you all so much and I appreciate the positive comments. Let's get to 10K subs. And drop in the comments down below so that everybody curious can go read your thoughts. Put trap or run. Comment down below if you think this whole AMC GameStop move will be a trap and or a run. That is what I got for you guys today. I love you all. Lottery Stocks out.